So here I am placing a trade for a download. I press double trade here in the download direction because that's how it happens in the market. That is exactly why I decided to place a double trade right here. So I press the double trade button in the downward direction, but remember that if you engage in overtrading, you can also incur a loss here. Okay, so as you can see, both of my trades here were profitable. So hey guys, welcome back to my channel. How are you all doing? I hope you all are doing great. In today's video, I will try to trade according to the principles of candlestick psychology. In candlestick psychology, there are several price action based concepts such as support and resistance levels, breakout strategies, reverse trading, specific candlestick patterns, and various chart patterns. So, whatever price action based things there are and whatever price action based concepts exist, I will try to trade according to them. And that is why we can understand the psychology of any candlestick when we have a good knowledge of all these concepts. If we apply all these concepts together on a single chart and look at all these things at once, then we will be able to understand the psychology of the candlestick. So, in today's video, that's exactly what I will try to do. Let's see how many of my trades turn out to be profitable here and how many end up in loss. That depends. It depends on the market, how the market moves, what its flow is like. As always, I feel that it's important to first find a chart with good movement. So here, I will first look for a chart that shows both acceleration and deceleration, something along those lines. This chart isn't really showing anything special, so I'll try changing the chart here, and this chart here, it's somewhat okay, but first I'll draw support and resistance lines, and only then will I decide. However, since this is a sideways chart, I'm avoiding it. Otherwise, I'll have to wait a bit to find a good chart. So, I notice this chart here, and first I'll draw a horizontal line. I'll place the horizontal line above because it's important to know the level where the market is currently moving. So there's a resistance level above, and I've marked that level here. Now I can press one here for a down bet. Okay, I've placed a $300 bet in the downward direction because looking at it, the market is bearish. So there's a high chance that the market will remain bearish from here as well. And based on the previous level where there was selling pressure, I've created a zone. Normally we avoid placing trades in such zones, but here I've placed one. So the market movement should remain bearish here because previously the market has come down from that level. Now if we look at it pattern wise, this chart pattern is also called a double bottom pattern, or sometimes it's referred to as multiple time rejection. But if we understand the logic of any level, whether there are more buyers or more sellers at a level, then we can say that there are more sellers here. So the market movement can also remain bearish. For now, I'll have to wait a little until the closing of this candle. Okay. Okay, so finally, after waiting for a while, my trade here has become quite comfortable. So again, here I will look for a chart with good movement in the same way. And if I see any support, resistance, or any strategy according to price action, whatever strategy is based on price action, I will try to use them. So first, I need to find a chart. To find as always, if you have any doubts, you can let me know in the comment box about which topic you have a doubt. So here, I will try to find a chart. You need to find such a chart where there is clear price action, meaning it shouldn't be a sideways market. The movement should be clearly visible with respect to support and resistance. So from these two levels, the market has been bullish, and from the next third level, the market will try to become bullish again. That is why I have presented a trade here on this green candle, or you could say for the sake of the word. I will try to highlight this with a horizontal line on the lower side. If you look at it previously, the market has been bullish from there twice. Once again, there is a high chance that for the third time as well, after testing, the market will move up. On the upper side, I have marked the resistance level because wherever there is a support level, the market tends to be bullish, but it is important to know how long it will remain bullish. The resistance level is at least where the market can go up to. So here, I will have to wait a little for the trades I have placed to reach their conclusion. The movement is happening the other way. However, the trade I based my decision on, the wick on the lower side of its previous candle, has completely tested that level and a long wick has also formed. I get double confirmation that buyers are active for the green candle, so the movement here should mostly be from buyers. For now, I will have to wait here and only after that. Okay, so finally, my trade is profitable. Okay, so then let's see. So the trading strategy that I have implemented here is currently based on support and resistance levels and the double bottom pattern. So again, I am changing it to 4 right here to see the results. Any strategy that I use in this video will be based entirely on price action movements, so we will try to understand the fundamental psychology behind each candle. Okay, if I need to make an indicator-based strategy, I will bring a separate video for that. So how does the market movement look here? First, I will try here, and after that, I will decide where the market flow could be. Here, I have drawn the whole central line and pressed it here. From here, the market movement has been consistently bearish, and next time too, the market is likely trying to be bearish from this point, so there are very high chances the market movement will remain bearish. So for this reason, I have placed a trade in the downward direction here, and there is one more important thing. For example, if we are using support and resistance and placing trades based on support and resistance, then we should wait for one confirmation candle there. As everyone knows, when the market is at a support level, it tends to be bullish, so we are confident it will be bullish. But to confirm, we need to let the candle form. Is the green candle really showing that buyers are active there or not? You must have also heard many times that sometimes the market breaks its support level and then the scenario changes completely. That's why it's very important to wait for one candle here, which is what I always do. Now, according to the resistance level, I have faced trades where the previous candle has already turned red there. So that confirmed for me that the market movement could stay here, that sellers are active at this level. That's why I took a trade in the downward direction here. For now, I will have to wait a little here. The closing of this candle is okay, so finally my trade here has been profitable. Although it was profitable by a very small margin. Fortunately for us, our trade turned out to be quite a profitable one. Now I will try to open the next chart here and will carefully identify and mark the support and resistance levels. So let's move to the second chart. Because finding the right chart is a very important thing. I feel this way because this is just the very first essential step in our process. The first priority should also be that if the chart doesn't show a good movement, if the chart is not according to us or our strategy, then how will we use our strategy there? That's why finding the right chart is very important. Here, I don't see anything special in this one. I will have to wait for a little while and find a chart with strong price movement. And in JPY, I'll check if there's a chart where the support and resistance are clearly visible. I really need to find a chart just like that. So here I am currently placing a new trade for a download. I decided to press double trade here in the downward download direction. Okay, so I might have previously mentioned to you about a specific concept, the one regarding wicks and reverse trading. If you have any doubts, let me know in the comment box. Look, where I pressed the trade, there were already 2 red candles formed previously. Now I feel that if 2 candles have already formed, then usually a 3rd candle of the same color forms as well. And then a reversal happens on the 4th candle. Okay, so that's the concept I've used here. At least 3 red candles should form here. And after that, a reversal candle can form. But as they say, there is always some risk, about 5 to 10%, because you can never be completely certain. The market movement can be anything at any time. Now look, the 3rd candle here has also formed as a red candle, just as I predicted, because I have carefully analyzed these patterns numerous times based on my experience, and this is exactly what happens in the market. That is why I placed a significant double trade here. So finally, both of my trades turned out to be quite profitable, and the wicks also play a very significant role in this strategy. If there are long wicks formed on the previous candle at the exact place where you want to trade, especially long upper wicks, then strong selling pressure is often clearly visible there. Based on that information as well, I make my predictions here quite often. So for now, I will change the chart to see one with a good movement and check exactly how accurate the support and resistance levels are there. So right now I need to see, because if I find a really good chart, then it's exceptionally beneficial to draw support and resistance on it. The certainty is also quite good, as we can identify and establish the support and resistance levels very accurately. Now here, the market has been bearish repeatedly, so there is quite a good opportunity here, but I will still change the chart and check because it's not such a great opportunity that I should place a trade. So here, I have placed a trade for a green candle that is in the opposite direction. Now this trade that I have placed is based on the candle. Looking at the previous candle, I have placed the trade right here. The previous candle where I placed the trade is a very solid green candle, which indicates that the buyer's volume is high here, and we can say that the buyers are active. So the market movement should remain bullish until the market reaches its resistance level. Until then, the market movement here can certainly remain bullish. And I absolutely won't assume that the market will keep forming green candles one after another. It's possible that in between, some retracement candles may also form. That's also possible. Basically, anything can happen here, and since my trade is in the opposite direction, there's a bit of risk involved, so I'll have to wait a little here, and only then will I see the result. As you can see, my trade here has ended in a loss, so I have placed a double trade in the opposite direction. Okay. Because I feel like the buyers are active here, so the market movement should remain bullish. That's why I have placed a double trade here. Let me tell you one very important thing before we begin. I am not a professional financial advisor. Before you even think about placing any trade, please make sure to do your own thorough research, because trading is inherently very risky. You can certainly make a profit here, but you can also incur significant losses just as easily, so invest your money here only after thinking very carefully about it. I would like to give you one crucial piece of advice. Whatever your total account size is, even if it's a very small amount, use only 1 to 2% of it per trade. Don't take too much unnecessary risk. The second important thing is that you should strictly fix the number of trades you take in a single day, whether they end up in a loss or a profit. If you end up in a loss, don't try to recover it immediately by jumping back in. If you do that, you'll end up overtrading, and overtrading can lead to massive losses here. So both of my trades here have been quite profitable today. In the world of trading, the very first step is proper money management if you truly want to become a profitable trader. But if you're trading just hoping that you might win by chance or become rich overnight, please don't do that at all, okay? Trading is very risky, so only enter the market after learning and thinking it through completely. Feki? If you have any doubts about any specific concept, or if you're a complete beginner and want to learn, you can leave a comment below. Also, very soon I'll start a dedicated series for beginners if there are a lot of comments requesting it. So, if you're a beginner on my channel, please do comment that you're a beginner, and I'll start a series for you very soon, okay? Now, I need to find some new opportunities again. To find good opportunities, first I need to find a good chart where the support and resistance moves are clearly visible to the eye. Here I'm trying to see on the chart exactly how the market movement is going right now. So let me look at this chart. It's currently quite high on the upside. But I need to see how the overall market movement is. So for that, I'll have to draw horizontal lines and mark the levels precisely. Here, I've marked the level on the upside according to the long position, and by marking a double level, I've also created a specific zone there. So this zone becomes the seller's zone, and because of this, the market movement will try to remain bearish for a while. Now, I'll wait a little until the 9th candle closes, and only after that will I place the trade, okay? So right here, I have just placed a trade in the downward direction. Okay, so now I've placed a $300 trade at this point. Based on the current resistance level, I've placed the trade here because there is clear resistance above and two very active candles have already formed in this area. So this gives us a strong indication, or rather, we can call it a solid confirmation, that the sellers here are truly active and that this specific resistance is a very strong resistance level indeed. That is exactly why I placed a trade in the downward direction here. For now, we will have to wait a little bit. And as for understanding the deeper candlestick psychology, I already explained the main important concepts to you at the very beginning of this session. First of all, you need to find the support and resistance levels and then draw them properly. Secondly, you need to identify the long wicks. According to the wicks, look at the previous candle to see whether there are more sellers or if buyers are active. Buyers are considered active when there is a long wick on the lower side of any candle, which indicates buyer activity. So finally, this trade has been profitable for me here. I have a lot more content to share in upcoming videos, so if you are new to the channel, make sure to subscribe so you don't miss any notifications. If there is any informative video on my channel, you will definitely see it. That is exactly the reason why you really need to make sure you do this. If you are just starting out as a beginner, you should also hit that notification bell icon because you really need to learn a lot. For this specific reason, I will once again look for short selling opportunities here and try to find exactly where a good setup forms so that I can take the right entry. For now, I am switching over to a different trading chart and checking it thoroughly. This is a chart with solid movement. By the way, many people have asked about how to find a chart with such good movement. I will make a video on that later. For now, I have placed a trade here following the 1 hour direction. Why did I do that? Let me tell you. Now look, the trade I have placed right here is based entirely on the previous candle. There is a visible wick on the lower side, and if we look at the previous market movement, buyers are active here. The market movement should remain bullish, and the market has also tried to be bullish from the lower side. However, sometimes a reversal candle or a red candle forms in between, which causes the candle to form as it does. There is a support level here, so the market movement should remain bullish and the market will stay bullish until it reaches the resistance level above. Okay, so truly understanding these things means understanding the underlying psychology of the candles shown here. When you actually begin to place real trades, you start to understand these things very well and you can effectively use technical analysis on your own live chart. Okay, so finally, my trade right here turned out to be profitable in the end. Okay, so I think for today I have already taken enough trades for one day, so I shouldn't trade anymore because if I keep trading, it's possible that I might have a losing trade and then I might feel like I need to recover that loss, which could lead to overtrading. And I don't want to do that because if I overtrade, my losses could increase even more. So that's it for today's video. If you liked the video, please make sure to give it a like. If you're visiting the channel for the first time, don't forget to subscribe. If you have any doubts, you can let me know in the comment box. And if you haven't joined the Telegram group yet, the link is in the description. You can join the Telegram from there. Okay, so that's it. See you in the next video. Until then, thank you.